Hello traders, and welcome to Trading the Trend. I am Dennis, and this is my weekend report for week ending March 31st. We've made it to the end of the month, end of the first quarter, and right now we're looking at the S&P 500. Got a lot to cover, so I'll jump right into it. We had an up week after a pretty good down week. We missed being positive for the month by a whole 92 cents. We were positive early in the day, but it sold off late. So if you look at this on the monthly, and we finally got a red candle after 4 straight up months. The Dow was the same way, but Nasdaq still had a very positive month. The semiconductors had a very positive month. So there's still a significant part of the market that is still in rally mode. Most of the market is above its 10-day moving average right now, so not a whole lot to worry about, even though we broke our stretch of consecutive up months in the Dow and S&P. Plus, we like to see the Nasdaq and the semiconductors leading. That indicates strong market and that people are looking for more risky investments. Now moving on to oil. Let's get back to the weekly. And you can see in oil, we'll focus in a little bit. We had a real good up week. Energy stocks got a bid this week. Most everything energy related was up for the week. Nice engulfing reversal here, and you can see we're trying to get above that magic line of $51. And if you back this out a little bit, you can see we still got this pattern of these higher lows, higher low, and this is going to be another higher low. So we'll see if we can get a higher high from here. So if we can get above that $51, then maybe we can challenge up here in the $55 area in a few weeks. Looking at our metals, silver had a very good week. Gap open, and it held that gap for the whole week. We're trying to get back up and try to get us a new yearly high if we can get above this point of around 1750. So we'll be shooting for that this weekend. Gold was up but then sold off a little bit, so gold is still not nearly as strong as silver. Silver's up 14% for the year, while gold is only up 8%. My gold miners, that was down a little bit. It's still up 9% for the year. Now let's look at how all this is affecting our currencies. We'll start with my strong week rankings. I included every day's ranking since the yen became our strongest pair, and as you can see, things are basically just trading inside a range right now. I mean, the yen's remain strong and the New Zealand dollars remain weak, but there hasn't been a whole lot of movement. Matter of fact, if you'd gone short the New Zealand dollar against the yen back here on the 22nd when it first showed up as my top strong week trade, and now we're on the 31st, and you would have been virtually break even at this point. So not a whole lot of movement. Most of the movement has come between the 2 and the 7, and as you can see, all your European currencies, this entire stretch, have occupied the 2, 3, and 4 spots. They've just changed positions, and as of late in the week, the pound got a bid, and the pound is coming on pretty strong, and I would expect it to possibly pass the yen on Monday. We'll see if that can happen. Now let's look at some pairs. Here we are, weekly chart of the euro US dollar. We're still in that big trading range, but we had a nice engulfing candle reversal. So I would expect with such a candle and finishing at the low that this thing should continue down in this coming week. We'll see what happens if it can get down here to this 1.05 area where there's been strong support in the past. Now, if we focus in a little bit and look at this one on the daily, why did it reverse? Well, it hit the 200-day moving average, and it reversed right there. And then we had continuation. This happened on Monday, then we had continuation on Tuesday, Wednesday, Thursday, and then it hit some support here on Friday. That blue line is the 34-day moving average, which is my proxy for the 200-day moving average on the 4-hour chart. So that's offering a little bit of support here. We'll see if it can last. Next one we'll look at, let's go back to the weekly chart, and the Aussie US dollar. And you can see we got a little doji here, nothing happening. The US dollar and the Australian dollar played pretty much a dead heat for the week. But since the Aussie is even with the US dollar, then you probably expect the Aussie to have done well against the euro. And there we go, Aussie euro, and you had a pretty good down candle. It's been in this little back and forth, up and down pattern. So we'll see if this thing can actually start another leg down from here. If you back this out a little bit, you can see we've been in this stepping pattern of lower highs and lower lows for going back to the middle of 2015, and nothing's really changed here, just that these movements seem to be tightening up. So you had these big swings up here, and now the swings are becoming much smaller. So if we do get a lower low, it probably won't be much lower than this. And if you back this out quite a ways, you can see there is a little bit of support here going back to 2015, 2014 in this area down here where this low was made. So we'll see if that continues to be some support there. Last one I'm going to look at, since we have weakness in the euro, is the pound euro right there. And I've been looking at this possible head and shoulders top, and we ended up forming a second right shoulder. Nothing really unusual about that. It happens at times. And then now we've had a pretty good down move, and this past week was that it accelerated, so I will be looking for it to possibly test this neckline I have at 0.8350. If it can get through there, then a test of the 200-week moving average certainly will be in play and probably challenge this low down here. See here, the Brexit vote happened on this candle here, so we're setting up nicely to retrace that entire Brexit rally. So we'll see what happens there, and that's pretty much what I got for you. Hopefully everyone had a great weekend. It's a new month, a new quarter, so I will catch you all later. Bye.